All right. All right.
Okay. All right, so we're set. Kwanya, am I? Good morning, Pablo.
Good morning. Good morning to everybody.
Good. Mr. Pablo, what I'm going to do is, how do you want to do this? Do you want to talk about yourself real quick and then go to the chart that you set up for us?
Yes, absolutely, yes.
Go ahead.
All right, my name is Pablo Mojica. I'm an enrolled agent with the IRS. I've been practicing tax preparation for over 30 years. And one of the things that I notice in my practice is that I get new clients because they were not happy with their tax preparer. There's many reasons, but one of the reasons that I always notice is that the tax preparer put items in their deductions and income that the client was not aware of. So just to start out on that, I did a list of the things that you should be looking out for when you're choosing a tax preparer to do your taxes. This is and the reason why I say that and I stress it is because you're dealing with the IRS. If you get selected for an audit and they take the position that the tax return that you filed is either a frivolous tax return or fraudulent tax returns, there's many penalties involved with that. And the penalties are not small. They're very, they go into the thousands and thousands of dollars. Anyway, I have, I cut out a list over here and it says how to choose a tax preparer. One of the things that you should look out for, if the preparer is available all year. You know that during tax season, like for instance, myself, during tax season, I'm there every day. After tax season, I'm not there every day, but I am available if a client has a question or if they get a letter from the IRS. You want to make sure that that tax preparer, you can reach out to him and, say, hey, listen, I got a letter from the IRS and I got a letter from the IRS and, what is it about? I don't understand it. So that's one of the things. The other thing is that ask if the tax preparer has what is called a T.E.A.M, which is a preparer tax identification number. That's required by the IRS. You must have one of those. Inquire if the tax preparer has credentials, whether he's a CPA, a lawyer, or an enrolled agent. You want to make sure that they have those credentials. You can also check that the qualifications with the IRS website. You can go in there, look up the tax preparer, and find out if they have credentials. Also, you want to make sure that the tax preparer files your return electronically. By law now, the tax preparers must file the tax returns electronically. If they tell you, no, we don't file the tax return electronically, that should bring up a red flag, for many reasons. It could be that they got suspended from the e-file program, or, they got suspended or disbarred from the profession. The other thing that you might want to look out for, make sure that they files and returns. You want to provide records. Also, you want to provide records and receipts for the tax preparer. A good tax preparer is going to provide. Is going to ask you for those records. If you have a W-2 form job, they're going to ask you for your W-2 forms. If you're self-employed, he's going to ask you for your a statement of your income and expenses. And when you're self-employed, one of the things that you have to look up, that you have to do is that you must keep records. If you're self-employed and you do a Schedule C and you have a job, you prepare, what is it, cupcakes or whatever the case may be. You have to do what do you call it? You have to keep records of your income and the expenses incurred related to that business. The other thing is that you have to, and they also can represent, your tax preparer can also represent you before the IRS if there's any question. So let's say you have to understand representation. CPAs, lawyers, and EAs can represent you before the IRS. So if there's any questions, you got a letter, or they're going to do what is called a mail audit, you know, they can represent you with that and help you prepare for that. One of the other things that you have to look out for is you never sign a blank tax return or incomplete tax return. That should also bring up some red flags. Because when you're doing the tax return, the preparer is doing it, he has to give you a completed tax return for you to sign. He cannot just say, oh, yes, sign on the line, and now once you sign and all that, don't worry about it, I'm going to transmit it. You don't know what that tax preparer is putting in there. You know, they can be putting things in there that are going to hurt you in the long run. So you have to make sure that the tax return is completed before you sign it. Also, you have to review the tax return before you sign. You know, make sure that, you know, all the forms are properly filled out. Also, you want to make sure that the tax preparer signed the tax return. If you see a tax return that that the preparer did for you, and that tax return says self-prepared, that should also bring up a red flag. You know, those things you have to review, because if he put down self-prepared and he put items in there that you did not tell him, or expenses or income, you're on your own. You know, you signed that tax return, so you're on your own there. So you have to make sure that he signs the tax return. And they also have to give you a copy. You know, a good tax preparer will give you a copy of the tax return, and you got to hold on to those for at least 3 years. You know, you signed, you did the tax return. The tax preparer did the tax return. You have to hold on to it for at least 3 years, in case there's any questions. You might do the tax return now, and then 2 years down the line, you get a letter from the IRS. Questioning you for a tax return that was prepared 2 years ago. So you must keep records. You must hold on to everything for at least 3 years. Ask if the tax preparer signs the tax return. So basically, these are things that you have to look out for when you're choosing a tax preparer.
Great.
Any questions?
I have a couple of quick questions, and I've learned 3 things from you already. I did not know that the preparer can actually represent you if you're being audited. That I didn't know. Yes,
the preparer can represent you. You get a letter, and let's say sometimes they might call you into an IRS office, or you might want to say, listen, I cannot go to the office. Can you guys come to my office? So if the IRS agent goes to your office, you might want to call your tax preparer so he can be there with you and represent you and go through the things, through the tax return.
And the only way for that is that they have to be available all year round.
They have to be available all year round. Yes. Right. My clients, I'm not at my office every day now after tax season, but my clients do look at, when for instance, I just got an email for one of my clients. So she needs help with a letter that she received from the IRS. Mostly all these letters, that the majority of them is items that you forgot to put on the tax return. You might have you did the tax return, and let's say you forgot to report a W-2 form, or you forgot to report interest, or if you did a sale of stocks, bonds, or whatever the case may be. Now you have to realize after tax season is over, the IRS has what is called matching program. They're matching what you reported on the tax return versus what they got from all these institutions, related to your tax return. So if something was not reported on the tax return, it's going to generate a letter. It's called a CP 501 letter. And what that letter does is to say, hey, dear Mr. and Mrs. Taxpayer, we're proposing a change on your tax return. You did not report this item. Therefore, you owe us X amount of dollars. Usually that's the, and it's scary the way they do the letter. But if you have the documentation, and you submit it to them, that should be resolved. Usually they give you 30 days to resolve it, If within those 30 days you're not able to resolve the letter, come up with the documents, you can request an extension for another 30 days until you get yourself, and they're pretty good at that. They'll give you another 30 days and you answer it, and that'll be the end of that, But on something like that, you have to make sure that to avoid that, you have to make sure that you give the tax preparer all the documents that are needed, and sometimes, we're human, we sometimes forget to report it, they might forget to give it to you, whatever the case may be. And it happens, I've had that happen a lot. The client forgot to give me a form or something like that, and then they get the letter at the end, at the end of the year, usually 6 or 7 months down the line after they filed the tax return.
Okay, so what I'm hearing is, we technically, if you're on the up and up, we shouldn't be scared if we get a letter from the IRS.
No, you correct. Yes, you shouldn't be scared by the IRS, because, like I said, these things happen. Sometimes you might have forgotten an item, and once you do it, problem solved. It happens every year, not only to me, to other tax preparers. The client forgot something, so you get a letter. All right, you address it, problem solved.
Okay, good question. Now I have, and I know you're inundated with paperwork. Is it better to just give you all the receipts and let you decide what can be deductible?
Good question. That's a very good question.
Okay, thank you.
Your receipts, it's your backup of whatever expenses you had. So if you keep a ledger, and on that ledger, give you an example, you're an Uber driver, a taxi driver, and you fill up your gas tank every day or every other day, you hold on to those receipts. At the end of the day, you're supposed to total that up, or at the end of the week or the month or whatever, total that up. Now you said, okay, I have so much for gas expenses, insurance, and all that. You provide the tax preparer with a statement saying how much was your income and your expenses for the whole year. Don't give the tax preparer all those receipts to add up. You're supposed to hold on for that, because the numbers that you give the tax preparer, if let's say you had $1,500 in gasoline throughout the year, so your receipts should add up to those $1,500 that you give into the tax preparer on that statement.
Got it. Great. Because sometimes what we do is we think something can be deductible, and then we don't know there are certain things that can be deductible.
Well, a tax preparer should be able to answer that question. You might have an item and say, hey, listen, is this deductible or not? In my field, in my title, I'm required to do updates every year, to stay up with the profession. So, if you know that something you question, is this deductible or not, ask the preparer. He'll answer it. He'll give you guidance on that, whether it's deductible or not.
Good. How important it is for us to have a home-based business?
How important it is for us to have a home business?
Yes, a home-based business, yes.
I mean, many people have a home business. That there is a special form for that. The IRS is not too happy with that, to take a home business deduction, but it is available. They're just not too happy with it. And sometimes it'll highlight, But if you have your records and all that on the up and up, it shouldn't be any problem. Now, what the IRS does with that, with the home business, is they give you what is called a standard deduction for that. You calculate the square footage of the area where you keep the business in the home, and you once you have that, you multiply by that number they give you, and you take that deduction.
Got it.
And which is better. Now, if you want to do it, the more complicated way, then you have to figure out how much is your utilities, what part of the utilities and the home expenses can you deduct, what portion you can deduct on the business side of your return.
Got it. Got it. Got it. Excellent. Excellent. And I did not know that you can ask your tax preparer to sign a tax return.
They're supposed to, by law. You're hiring that person to do your tax return. They're supposed to sign that tax return.
Got it.
They're
Okay.
supposed to, by law, and give you a copy.
Got it. Okay. Now
Some tax preparers don't do it because they want to avoid paying the taxes on it, or whatever the case may be, or some of them that can bring up a red flag, because it could be either that or they've been disbanded from the program. It could be a lot of reasons, but a good tax preparer will ask you, will sign the tax return. I know I do. My clients, when they come to my office and they give me the tax return, I sign it.
Right.
So they know that, they feel more comfortable,
Now that I think about it, there is a line at the bottom of the page that says prepared by.
Correct. Yes. There is where it says prepared by, the name and then the signature. And if you tab over to the right, it's got what is called the tax preparer's ID number, which is called the P10 number. It starts with the letter P, and then it's got 9 digits.
Got it. All right. Give us some of your horror stories. Give us.
Oh God. I had
3 quick.
This is what, 2021, right? 2019, I had a married couple. They have 4 children. So they went to this tax preparer, and the tax preparer says, no, you see the filing status. Oh, before I backtrack to that, let me explain something else. Your tax is based on your filing status. So that's very important. And the filing statuses are single, married filing joint, married filing separate, head of household, and qualifying widower, right? So this couple, they've been filing joint all along for many years. Now they went to this other tax preparer and said, no, you don't have to file joint. You file head of household, you take 2 of the children. You file head of household, you take the other 2 children, and you'll get a much bigger refund. Sure and dandy, they did that. And then they got the money, they spent the money. And then after they spent the money, guess what happens? The IRS sent them a letter. Hey, you guys are married. You're supposed to do married filing joint, and you file the head of household. They had to pay all that money back, plus penalties and interest. So they went to another tax preparer. They saw what they did. They try to help them out. They had to pay the penalties and the interest and all that. But the other tax preparer, for some reason or another, they just couldn't, get along. So to make a long story short, they were referred to me by one of my other tax clients, and they explained the situation. And the thing is that, the hardworking family, very good people, but they don't have a clue about tax law or what's right and what's wrong with that. And, the IRS code can be very complex. So you're there to, put it in simple terms so they can understand it.
Got it. All right, give us another one.
Okay, I had that one. Let me see. Oh, yeah, I had another one that the client used to make $45,000 on a W-2 form, and the tax preparer was putting $40,000 in itemized deductions. So yeah, they got a very huge refund. So, the numbers don't lie to you, you know. Um, they had that, and then the IRS pulled them in and says, justify it. You make $45,000 a year and you got $40,000 in itemized deductions. So how do you pay your rent, your expenses, and all that with $5,000? You know, so these are things that you're supposed to, as when that you're supposed to go over with the tax preparer. And if the tax preparer is doing that, that's a no-no. That's a no-no on that. You're supposed to go by what the tax client gave you. You're not supposed to add any numbers in there. Oh, let me help the client out, get some. I know some tax preparers do that because they want to increase the refund. And some of them, are dishonest. I'm not saying all of them. The majority of the tax preparers are honest, but you have a few that what they want to do is, what do you call it? Line up their pockets with their refund. And that happens a lot.
So the bigger the return, the more
the more they're going to get. And it usually happens, what do you call it? There is a form when you're getting a refund that form, you can split your refund into, let's say, oh, I want my state refund to go to my savings account or my checking account. I want my federal refund to go into my savings account, part of it into this savings account and part of it into this other savings account. There is a form that you fill all that, you put that information in there and you submit it with your tax return, and the IRS will honor what you requested. So some tax preparers, what they do is that they put their bank information in there and siphon up $1,000, $2,000, or $3,000. They're stealing from them. That's happening a lot. So, and that if the tax preparer gets caught doing that, they can go to jail for that. What? And the reason that what happens with this, let me go into the other subject. What happens with this, I get a lot of clients, they don't have money to pay, the tax return, after the holidays, everybody's broke, so they don't have, they don't have the money to pay. So some tax preparers, I said, don't worry about it, I'll deduct it. That's when they take advantage of the tax client. So a good tax preparer, will have a service for that. I have a service that, if they don't have the money to pay, I have a service. And that service, what they do is that they deduct my fee, put it in my bank, and they take their refund and put it into their account. It costs money, but it's a reasonable amount. You'll pay what, $43, $44 for it, like about $45 for the service. But you're supposed to do it that way. You're not supposed to put your tax information as a tax preparer and put that into the client's tax return. Those are grounds for getting you suspended.
Okay, I have a question. There was a video that we shared with a whole bunch of people about a situation that happened in Baltimore, where the guy. Yeah. My question is, and I don't know if you know this, but why did the IRS process the paperwork if it was not signed?
Because that's a good question. The IRS takes your tax return in good faith. And there are millions of people that do file their own taxes. They buy the program, a program, they put it into their home computer and they prepare the taxes on that, and it's self-prepared, So you get millions of people that do file the taxes, So the IRS, when you file the tax return, they're not out there saying, okay, who prepared this tax return? Was it a tax preparer? They're not there they take your tax return in in good faith when it's filed electronically. But when these things come out and you file a complaint, they will look into that complaint. So what happened with that video, I saw that, is that one or two people filed a complaint with the IRS, with the Office of Professional Responsibility. So they started to look into that, and something like that, this guy's looking to go to jail for that. So yes, these things do happen. And, on that video, they touched base on that. The guy was putting his bank information on the tax return, and he was siphoning the, monies off. I had a guy like that. I have my banker. Now that you question, he said, give me more stories. I have my banker, the guy that I usually bank with, nice guy and all that. We're talking one day in his office, and he asked me, he asked, I told him that I'm a tax preparer. He says, listen, can you look at my tax return? I have a funny feeling the guy that I did the taxes with, he siphoned some of my money. So I took the return, I ran it in my system. I told him, this is how much you're supposed to get. He said, I got $2,000 less than that. So that's an indication,
One of the things that we like to do is we like to have fail safes, and we want to make sure that everything is on the up and up. So one of the things that we teach is always have a backup for someone to look at the data and information other than your major or your main preparer. Just a backup, just to make sure that nothing was missed, the T's are crossed and the I's are dotted. That's one of the things that we put across.
Right.
Okay. One more question, then I'm going to open up the room for questions. What do you think about corner store tax preparers?
Well, some of them may not have a license. They may not have credentials.
Wow.
And they're required to do a yearly course. Some of them are good. I'm not going to say that everyone is out there to rip off, the public. Some of them are good, but unfortunately, you got some of them that they buy the software program and they say, yes, I'm a tax preparer, because they key in the information in the system and it runs it through. Now, a good tax preparer, the program is designed to make your life easier as a preparer when you're calculating the return. But you have to understand the law. You have to understand it to put the correct information in there. So if you don't understand the law and you got a couple that came in, like the example I gave you before, they put, no, you do it head of household. If you understand the law, you know that they're married filing joint. They only have two choices, married filing joint or married filing separate. That's what it is.
So it can't be one or the other. It has to be, yeah. Great. Okay, great. I mean, excellent information, excellent data. What I'm going to do is I'm going to stop sharing my screen. I'm going to open up the room. If anyone has a question, unmute yourself and ask the question. And okay, Pablo, how many more minutes do we have? Because I know your time is busy.
Probably like 5 minutes.
Okay, we appreciate you coming on board. Can we ask for permission to ask you to come on a little later in the next couple of months or so?
Yeah, I can do that, yes.
Okay, thank you very much. I heard Naima, I think has a question.
I had a question. It's Deandra.
Hi, Deandra.
Hi. So speaking of, you were just talking about the taxes, and my mother just texted me while you were talking that I had a bill from the state. I owe the state money. So, but the question I have is, me and her filed taxes at the same time. And when I went on the IRS portal to see when she's getting her refund, because she filed unemployment and she still have not gotten her tax return yet. And then we filed since May. I got my money back, and now the state sent me back, send me a notice saying that I have to pay this money by August 13th or whatever, but she still haven't received her refund yet. And I'm just wondering what's the delay. And I've been calling my tax guy, and I know when it's summertime after the tax season, he's kind of like, he's not working in the office as much. So I can't really get in contact with him. So I don't know what's going on, why she haven't received her is there something going on with people? I know I read something with people with the unemployment last year with something with the credit. I don't know what's going on.
Yeah,
So
okay, yeah. What happened is this, that many people in 2020, they received unemployment insurance. And, they received, a huge chunk. They would get the $23,000 in unemployment benefits. And, that's taxable income. So when the new president came in, passed this, I forgot the name of the act, that he, in the middle of tax season, he said, your unemployment insurance, part of it is not going to be taxable. So he passed that law in the middle of, what was it, March. And so he said, the first $10,200, if you're single, is not going to be taxable. If you're married filing joint and both of you received unemployment insurance, then the first $20,400 is not taxable. So what happened is that, I'm going to tell you my story. What happened? I had tax clients that came in early in the year, in February. They gave me the unemployment insurance. We had no guidance. We filed a tax return. All of it is taxable. And then, because like I said, the law was not in place back in March. So what happened? I'm sorry, back in February. So what happened is that all those tax returns that I prepared before President Joe Biden said unemployment insurance up to this amount is not taxable, those tax returns were e-filed, and I had a lot. I had about 15, 20 of those tax returns. So imagine if I had like 15 or 20, they must have millions. So we're scratching our heads. Well, what are we going to do now? Are we going to do an amended tax return or what? So they turned around and said, no, the tax preparer does not have to do an amended return. We're going to recalculate the tax return and send the tax client the refund that they're entitled to. But unfortunately, with all these other things that the IRS was doing, giving out the stimulus payments and all that, they started to do that now, but it's fallen behind. So that's one of the reasons many people have not received their refunds or part of their refunds. The other thing is that the IRS I just got an email from my association. They have over 35 million tax returns that have not been processed. So, people, I have a lot of clients that have been calling me, what's going on with my tax return? What's going on with this? Unfortunately, there's nothing that the tax preparer can do other than give you the telephone number for the IRS. And if you try calling them, they're fielding like 40 million calls a day. If they respond, if they answer maybe 2 million calls, you're lucky. That's one of the reasons. They understaffed, but that's no consolation for people who are waiting for the refund.
Wow.
Thank you for that. I
You're
appreciate
welcome.
So before we get to Naima's question, Charles, we had a question in the chat first from Richard. So I'm just gonna read it. What's the best way to include family members in the business payroll or directly from business accounts?
If you're going to pay them without payroll, that means that the employee that you have, now you're taking the position that they're an independent contractor. And you're going to give them a 1099. Now, there are rules for that, whether he's a bona fide W-2 form employee or a 1099 employee. 1099 employee is usually an independent contractor that you don't have no control of how he performs the work that he does. A W-2 form employee is someone that you control how they perform their duties, you supervise them, and once you do that, you're supposed to give them a W-2 form. There is a lot of guidance on that. because many people that are supposed to be classified as a W-2 form employee, they're being classified as an independent contractor. So you got employees that they do complain about that to the IRS. It's a form that you fill out and you send it out, but then, you know, the employer might say, hey, guess what, Joe? You're fired. So some people are, you know, they don't want to do that because they don't want to lose their job. But you're supposed to, if you have control over the work that he does and you supervise him, you're supposed to give him a W-2 form.
Understood. Thank you.
You're welcome.
Okay, Naima.
Okay. Hello.
Hi.
I'm in a business program that's being offered through my county. So I'm a W-2 employee, but I'm just trying to figure out if I want to go for profit business or nonprofit. I'll be, I guess, investing some of my W-2 income towards that business. I know how it works with nonprofit, but I wanted to know, how are the taxes, I guess, how does it go? Like when you're, I guess, with for-profit business, you have to loan money to that business, but how does it work with taxes on the giving end and on the receiving end?
Well, that's a good question, but first you have to know how you're gonna set up that business. Whether it's gonna be a Schedule C business, which is a sole proprietorship, or you're going to incorporate that business, or is it gonna be a partnership? So first you have to find out, you know, how you're gonna set up the business. Some businesses you might want to do a Schedule C, sole proprietorship, which is what do you call it? It's you prepare it and it goes attached to your personal tax return.
Everybody put yourself.
I don't know if that, you know, that answers your question.
Except for.
Everyone put yourself on mute, please.
Kind of, sort of. I think I would start off as LLC, and if that for-profit business starts making like a profit, then maybe go with SCorp.
Well, an S corporation and LLC, they're very similar. When you set up an LLC, most likely it'll be a partnership, unless you're going to do a single member LLC.
It may start off, I guess, single member.
Okay. All right. So if you're going to turn it into an S corporation, you can do that also. S corporations, it's the beauty about an S corporation is that the corporation doesn't pay the tax. You pay the tax because you're going to get what is called a Schedule K-1 from the corporation. And that flows into your personal tax return.
That's a deep question. We're gonna
Yeah, that's a little bit more complicated, but it's something that you might, I don't know if you have a tax preparer or an accountant, they can guide you through that.
Yeah, I don't have one yet, so I have to find one. But I was just trying to figure out which avenue I want to go. I don't know if I want to go for profit or nonprofit.
Okay. Nonprofit is usually these companies that set up to, you know, help the communities or a church, or it could be a different thing. And, you know, they have rules for that. You know, you have to follow, there are rules for that. You know, the IRS they have a lot of information on that. You might want to go into their website and do some research on that.
Okay, thank you.
You're welcome.
All right. Stacy has her hand up, Charles. That's the last one.
last question, Stacy, and then we can let Pablo go.
Yes. Hi. Good afternoon, everyone.
Good
So
afternoon.
hi. Good afternoon.
Hi.
So my question is, because it's actually been like kind of breaking my mind. So I had 3 businesses for 2020. I used my car and I used my home. Now I thought about spreading out the home and the car on over the 3 businesses, but then I think that's going to be too complex for the IRS and I don't want to get audited. So what I did was I put down for one of my business that I use my car and I put all like my receipts and everything there, but then I use another business for my home-based business. So I want to ask you, is that the best way to do it, or is there another way I should spread out all my expenses over
You
my
mean you
3
use
businesses?
your car for business purposes?
Yeah,
Oh, that's okay. That's acceptable. But
but
you have to keep
over
an
3
eye on that.
businesses. But I did it. I used it for 3 of the home-based business that I have. So how do I, because I use 3 separate scheduled seats. You can't. How I looked at it was like you can't use one car over 3. I mean, you can, but I'm trying to figure out the best way to do it.
You can, but the thing about that is that you have to keep meticulous records for that.
But
Your car,
I have
if let's say you use your car 50% of the time for personal use and 50% of the time for business use, that 50% of the time that you use it for business use, you might want to prorate it for each business. You might want to use the 50%, then out of that 50%, let's say 20% is for business A, 40% is for business B, and the other 20% is for business C. So you can prorate it. The thing is that it's you gotta keep a log for that.
Yeah, no, I have the log. I have my mileage. I have my receipts. I made copies. Like the record keeping is on point. It's just I was trying to figure out, do I really do it over 3 businesses? I thought it was just easier by putting it under one and then doing my home base under another business. So that covers like 2 business.
Okay, what type of business is your home base?
Um, tax preparation is one, and then I do Amazon, and then I work for a CPA during tax season.
Okay, so if the home business, if it's tax preparation, I fail to see why you would want to use your vehicle.
Well, no, the vehicle more was for the Amazon because I had to do
Oh, you
purchases.
do Amazon as self-employed. I would use it
Yeah,
for the
Amazon.
Amazon.
Okay.
Yeah, I would use it for the Amazon because you can readily justify that you're doing Amazon and you need to be out on the road to do your job.
Okay. All right. So I'll use it for Amazon, and then I could use the home base for like the tax prep.
Right.
Okay. Thank you.
You're welcome.
Thank you.
All right, guys, we want to thank Pablo for his participation in this group. Pablo, I have an idea for you. Are you ready?
Yep.
101 tax questions by Pablo. All these questions we're asking, it would be great to see them in a book format answered by Pablo. So thinking about a side business, that's another thing that we can supply you with 101 questions.
Okay.
And I know you have other questions also. I have someone special that wants to say something to you.
Okay.
Hi, good afternoon, everyone. My name is Maurice Prosper. I'm Charles's partner. And I just wanted to say, Pablo, phenomenal as usual. I've known Pablo for years, and he is my tax preparer over the years. And he is so knowledgeable. And the thing about Pablo is honesty. He is not going to tell you to do something, if he's not going, if he wouldn't do it himself. But knowledgeable, honesty, he's organized, and he's always available. Just wanted to put it out there, and I appreciate you, Pablo.
Thank you.
Coming out here to speak to everyone because taxes are so important, and we need to be on point with that. So hopefully you will join us in the future.
Yes, thank you so much.
All right.
Thank you.
Thank
And
you.
Pablo, you have our information. If you have anyone in your circle, in your group that would love to participate on Sunday mornings, just give them the information and they can log on as we do. So this is very, very simple. We're all about information. We're all about sharing. We're all about going to the next level. I want to thank you, Pablo, for the group. I want you guys.
One second, Charles, before we close out, Naima actually had an interesting question. Hi, Pablo, it's LaQuania. Do you
Hi.
mind sharing your contact information with us in case we would like to, someone in the group would like to use you as a tax preparer?
Sure, no problem. That's okay, fine.
So you can get that information to Charles and Charles can share it in the
Yeah,
Telegram group.
I have my email. You guys, you can send me an email and we'll take it from there.
I have the information that you guys, the sheet that you saw, Pablo's information is on the top of that sheet. So I'm going to share that with you guys as soon as we get off the call.
Thank you.
So you're going to have the sheet what he spoke about and his information on the top. So you're going to have that. All right, so guys, we're going to close out. We want to thank Pablo. Pablo, thank you very much.
All right. Have a good one. Have a blessed day, everyone.
Thank you, Pablo. Thank you,
You're welcome.
Charles. Thanks,
Have a blessed
everybody.
day.
You do the same.
Closing out.
All right, bye.
Okay,
Bye
guys,
bye.
hold on, guys.